Hey everybody, Dave Bartosiak with Dave's Daily Dive here. Wouldn't you know it that the S&P 500 found its way back up right near that 50-day moving average, and then what happened? Ran out of gas, started heading lower. I've got 29.45 here as the 50-day moving average on the S&P 500. On Friday, 29.40, so just right there. And look at how many times we've had the same situation take place now. It's basically been the entire month of August where we're just going from, just a few handles. Well, I guess that's 50 handles north of the 200-day moving average. And then we keep flirting with this 50-day. Still range bound. Very strong range-bound market here, and it's made for some pretty good range-bound trading, right? You buy in the lows, you sell in the highs, you buy in the lows, you sell in the highs. You have to do that 1,000 times. Problem is we've had some just terrible down days, which really makes it feel like the whole market's going to zero. It's happened on basically 3 occasions now where we have these real nasty spikes to the downside. And of course, don't everybody raise your hand at once, but tell me what this is for. Yep, that's right, trade war. We're in that cycle again. Trade war gets worse, market sells off, everybody freaks out. Then we rally on optimism, hope, or stupidity. You can pick whatever you want from that bucket. And then look what happens. We end up rallying back up. So that's kind of the situation we have right now, where all of a sudden the market is rallying up a little bit here. And, is there a reason? Maybe. More reason to look at gold. Actually, I guess that's the same chart, but we'll just do the spot gold here. I guess that could have worked, but what a move. And it continues. And we've talked about this. I've talked about it at least ad nauseum, I think. Rates go down, gold's going to creep on up. So that's going to help out a lot of things. Like the gold miners. Look at GDX since early June. This is a crazy move from $20 over $30. It's over 50% since mid-May. Same story with the junior gold miners, although these haven't even done as well, right? This junior gold miner ETF going from 27.84 up to just over 42.50 before it came back a little bit. And what's helping to pull that around? Well, look at this 10-year. Who'd have thunk? 10-year rates under 1.5 now. Pretty uncharted territory for the 10-year, but if you really want to see uncharted territory, the long bond, 30-year, under 2%, 1.97. I pulled this up the other day. The furthest that I could go back was something like, I think I went back to 1994 or something. I saw someone tweet out a chart going way back. I'm talking 1948, I think. And we are pretty much in the period of lowest rates ever. Quick look in on the NASDAQ. It's the same thing. If you pull up the NASDAQ composite, you pull up the Dow Jones Industrial Average, everything range bound, bouncing off 200-day, running out of gas once it gets up near that 50-day moving average. Everything's doing it. Now, the one outlier that we have here that we've talked about before is the Russell. So while the broad market averages, for the most part, have been doing well in terms of bouncing around between the 50-day and 200-day, Russell has been in a downtrend here. Could I use a bigger pen? A downtrend for a while. Let's zoom out here. And this makes even more sense. This downward channel the Russell has been in. Something's got to give. It's got to break out eventually. Really nice move towards late last week. Could be putting in a floor here. And if I clean this up a little bit, you could see that for most of the year, we're really in this range. It's just a little bit of a longer range of sideways action. We can just scratch this out. Let's pretend this doesn't happen, right? Let's fit our narrative. I mean, even if you go further back, right? The Russell, small period above that range, small period below that range, but it just doesn't want to go. 1460 up to 1600, that's all the Russell wants to do. That's all the small caps want to do. Now, the good news for the bulls here is that we are at the bottom end of this range, which means, hey, maybe we've got some upside coming in. Speaking of upside, let me give you 5 Zacks Rank #1 strong buy stocks breaking out to 52-week highs. Are you kidding me? Aerojet Rocketdyne Holdings, AJRD. Now remember, these stocks, Zacks Rank #1 strong buy stocks, these are stocks that have seen positive estimate revisions coming from analysts. So they're moving those estimates to the upside, providing some support for these extended moves. And you do get this downside volatility that happens in these stocks, right? But these are all buying opportunities. So being able to recognize stocks as Zacks Rank #1 or Zacks Rank #2, overall, it has a strong earnings trend. You should love it when these stocks pull back so you can jump in on them. That's Aerojet Rocketdyne, AJRD. Speaking of a pullback, you're not getting it right now, so best to sit on that one. But put that on your radar. The next one I got is Digital Turbine, and this thing just don't care. Good old Golden Cross here in December. Where were you guys at? I know I wasn't here, but I think that I think Brian Bolin has this stock in stocks under 10. Look at that, nice move higher, and it just keeps going. And again, the Zacks Rank #1 strong buy. So that means that analysts have been coming out with those earnings estimates, pushing them to the upside, helping this thing along. Then I got FTI Consulting, ticker FCN. Not the most exciting business in the world, but that's an exciting chart. Look at this thing come off the lows in June 2017. Real nasty pullback to support, came under the 200-day moving average, but then caught that next move higher. So fantastic, big breakout there. Continues to run. It's funny how the rich get richer, right? Look at this, big run up into the earnings report, solid earnings report, and then the stock just keeps going, breaking out new highs, just keeps on trucking. I've got Helen of Troy. Really some herky-jerky action going on in this one with a big spike up, and then it retraces back to that 50-day moving average. Seems to enjoy hanging out near that 50-day, as we see on multiple occasions. So if you're looking at that one, you might want to wait for that to pull right back to that 50-day before you get in on Helen of Troy. Last one I got for you is Hilltop Holdings. I can almost guarantee you that if you pulled up the price consensus and EPS surprise chart on Zacks.com, you would see an earnings trough happen sometime early in 2019, because that's when the stock really started moving back into the positive direction. And again, those technical elements that always end up popping up somewhere, you end up seeing the golden cross, right? You know, that 50-day crosses over the 200-day. Now, that's one of my least favorite technical indicators on earth, right? Because eventually, in an when a stock is going from a nasty downtrend to an uptrend, eventually what's going to happen, it's a mathematical certainty that that 50-day is going to cross up over that 200-day. I don't necessarily think that that means anything, you know, it's almost a self-fulfilling prophecy here, right? I'm much more concerned with a stock, you know, being under a moving average and then going above that moving average, then finding support at a moving average and moving higher, because that's really what makes sense to me. If you're, you know, it's almost another derivative, right? When you're talking about the next one and the next one, right? Like this crossing over that and that crossing over that, like it's just too far down the line now. I wanted to show you right before I leave what I tell you about that price consensus and EPS surprise chart. What did I say? I bet it troughs in early 2019. I'm not just sitting here making this stuff up, folks. The multicolored lines represent the evolution of our Zacks consensus estimates over time, and look what happened. Earnings troughed in early 2019. If you don't believe that stock price moves along with earnings, you should rethink the way you look at the world, right? It's really a simple function. The price, and I'm going to do this in a really crooked way just because I'm the one with the pen. Price, the stock price is going to equal whatever growth multiple, right? In this case, PE, times, well, guess what? E, right? Because if you wrote that up as a fraction, it's really, you know, price over earnings, right? Times earnings. Yeah, of course. Duh, Dave. But here's the thing. So then, in this case, how do you get the stock price to go higher? How is this number going to increase? Well, you either need to increase the multiple or you increase the earnings. And I would argue that the multiple will increase as the pace of earnings increases. So what's the number one most important thing on earth here? That's right. It's all about the earnings. Watch Dave's daily dive every time he does it. Okay, now that I've got you thoroughly hypnotized, thank you so much for hanging out with me here on Dave's Daily Dive. I'll have something for you later on in the week. Have a good one.